Good morning, students. Welcome to this morning classes of one of my very favorite subjects, that is cost and management accounting. I'm sure for you, for some of you, it would have become favorite, but maybe for some others, it would be slightly tricky. Let me share with you my own experience. While I was in Inter, I used to virtually hate this subject. And I used to always think that let this subject be optional. Now see the beauty. After 25 years of my wish, now at finals you do not have this subject. However, after I started practicing, I realized that my wish was not correct as a professional, though it may appear to be a great wish for students. Because, as I said, and I have been saying this, when you get out into industry for the purpose of your career, your profession, you find that there is a huge demand for experts in this subject. And unfortunately, very less people are working in this domain. Somehow, we as chartered accountants believe that this is not our domain subject. However, let me tell you, there is a great scope of this subject, and there is a great opportunity for all of us chartered accountants in this field. So I'll once again request everyone, that please take this subject seriously. Even if it is challenging, it is fine. See, always, that is the rule of law. If anything comes easy, it may not be always something which will be very fruitful. I'm not saying that everything fruitful or everything beneficial should be difficult, but generally, see, we always have very few who are scholars. We always have very few who are extraordinary experts. I am not, but that is okay. Even if I am not, I'm like Rahul Dravid. I'll work hard and I'll make my place in the team such that I become indispensable. So that should be your attitude approach towards your career course. And wherever you feel there is a subject, there is a domain which will add great value to you as a chartered accountant, as a professional, you should definitely work hard towards that particular domain. So, students, with this background, let us start. So, good morning, everyone. Welcome to this live classes, and let us take up our very important, very interesting topic. So, before I start, as usual, we will take up your queries or doubts, and then we will proceed to the next part of this chapter. Yes, Deepika. Good morning. Kairavi, good morning. Chalo, students. First, your queries and doubts, and then the next part in this topic. Chalo, tell me what are your queries and doubts? Maybe relating to this chapter, maybe relating to any previous chapter, any concept, wherever you want me to answer any question, please give the question, try to upload it in this message chat so that it is more easy, or you can upfront ask me the question. Yes, good morning, Adil, Minu, Kumari. So tell me your query, students. Okay, Deepika is asking, sir, in this chapter, are we supposed to do journal entries and ledger both? Yes, it depends upon what is asked in the question. If they are asking journal entries, so see, whatever ledger posting we are doing, it is debit credit. So from that, you can very well understand what should be the journal entry. So when we are doing ledger posting, by default, journal entry is automatically covered. Kervi is asking, sir, with respect to factory overheads, we shall charge them to production overheads control or WIP. But a factory overheads is production overheads control. So production overheads control account is what covers the expense of factory overheads. So if there is factory overheads, that will be debited to production overheads. See, production overheads, manufacturing overheads, factory overheads are all one and the same. So if factory overheads incurred is given, that is what expenses you have paid or incurred on factory overheads, that will be debited to production overheads control account. And factory overheads charged is given. So that will be credited to production overheads control account and debited to WIP account. So it is charged from production overheads control to WIP. Understood, Kervi? Great. Students, I expect that you all have solved the questions from your module relating to non-integrated, which is the main part from this chapter from the perspective of exams. As I said, in reality, except for very small entities whose accounts are nowhere published, only they may be using integrated for the sake of convenience. But for all practical reasons, for all reporting reasons, it is always the non-integrated which is used. Correct? So now, for the purpose of our academic understanding, let us also now take one sum from integrated. So I had uploaded this yesterday. Still, for the sake of convenience, you can take a screenshot of this. So we are going to solve question number 4. Please take a screenshot, students, of question number 4. Done? Perfect. Now, students, I hope if you have understood, the difference between integrated and non-integrated can be identified from the question itself. So, whenever you have ledger accounts in the opening, like bank, like debtors, creditors, fixed asset, capital, this may or may not be given depending upon how you are reporting the depreciation. So, depending upon this, you will understand that yes, this question is of integrated. If the opening balance does not have these accounts, see, this may not be given as I have been telling you. This may be the balancing figure. But what is important to understand, your opening balances is not having the accounts like bank, creditors, debtors, etc. It means it is non-integrated by default. Even if this is not given, please understand this, because this will be the balancing figure in case of non-integrated. So even if this is not given, still the sum is of non-integrated. A sum is of integrated only when these account balances are given in the opening. That is the best identifying method of whether your question is of integrated or non-integrated. Correct? So now, along with me, you all will also solve, so that now you will also understand the entries, the postings. So we are in question 4. Now again, my starting accounts are these accounts which are required for cost accounting. So it is SLC, it is LCC, it is POC, again production overheads, manufacturing overheads, factory overheads, all mean one and the same. I'll just go back to the question to see whether in the question they have administration and selling. Yes. So in this sum, we have administration selling details given separately. So I will have administration overheads control, selling and distribution overheads control separately. Then I'll have my product account, which are WIP control, finished goods control, COS, and then last cost P&L. Now, till this point, students, whatever is your method of accounting has no difference, no impact. What is differing between the methods of accounting is the further accounts. Now, till now, we were preparing this account. As you can see, after this, we were preparing the CLC account. So in both these sums that we solved, we prepared after all these accounts, the CLC account, right? As you can see in the previous sum also, we prepared or we solved it by preparing the CLC account, right? However, in case of integrated, now we will start preparing the other accounts. Bank you should prepare at the end because maximum entries will be in the bank. So whatever requirement of lines is there in that account, that need not be counted. So you will prepare bank at the end. Remaining we will start preparing. So it will be debtors, it will be creditors, correct? It will be fixed asset. Now in this sum, they are having depreciation provision account. I hope you all understand what is this account for. So you have depreciation provision, you have capital, you have the general P&L account, which is you can say P&L and reserve account, because in case of companies, you do not transfer the profit and loss balance to capital. You carry it forward under the separate account. Either it is transferred to reserves or it is carried in separate accounts. And then last is bank, which will have all the maximum entries. So students, kindly drop these accounts fast. I want you to solve along with me. Just give me a moment. Chalo, we solve from here. Students, is my screen visible? Okay, because it was blackout at my end. I don't know why. Now it is visible to me. Okay, so so I have all these figures. So bank balance is 3,000, as you can see here, right? Just expand this. It's not completely true. So bank to balance 3,000. Finished goods for WIP 6.5. To finished goods for WIP 6.5. Balance. Balance. Raw material is 6. Data is 1,000 and creditors is 2,000. Okay. Debtors. Debtors. Fixed asset 102 and 2.5. Capital 110. Profit and loss 8. Capital 110. That's it. Okay. So we are solving by taking amount, rupees in thousands. Done, students? Understood? Now, let us start solving PO transaction wise. And I'm sure now you can give me the entries. Sure. Can I expect the entries in the chat box? Give me the first 2 transaction entries, material purchase and then material issued for production, both direct and indirect. Chalo, can you all give me these entries, students, in the chat box? Let me see how much you all are now through with this chapter and concepts. Yes, students, give me the entries. Good. So Mustafa. Chalo, students, give me the entries. Okay. Okay, Deepika. So it is part entry, na? Debit you are giving. What is credit? Very good, Harsh. Very good. Very good, Deepika. See, students, whenever you are purchasing, what will happen? This account is debited. See, the best part is if you want to understand it simply and you are not able to direct figure out from cost accounting names, you should first find out the transaction as per your normal names. Normal names means names what we use in our regular accounting, financial accounting. And then you have to find out which is the account head used here. So this, if I have to say, that first is material purchase on credit. Now, if material is purchased on credit, what do? We debit the purchase account and we credit the creditors. Now here, since it is integrated, you have creditors account. So this entry will be passed through creditors account only. Similarly, when I will be using this material, direct material, if you remember, is charged to WIP. Indirect will go to production overheads control. So first two transactions, which has three different entries. So I'm now posting, giving the second effect. Students, please be very particular in giving the second effect. Otherwise, if you remember in the previous class, I had missed out one of the effects, which was later on identified to me, and we corrected it in time. Many times in accounting topics, this is a common issue that we miss out giving the second effect, and that is where our final balancing or maybe some of the final figures may not match. Now, the next transaction is payment to creditor, payment to debtor. So payment to creditor is 6,000, payment received from debtor is 35,000. So payment to creditor obviously will be routed through bank. So it is 6, and payment received from your debtors will also be routed through bank. Now, if you observe students today, I am purposefully taking two transactions at a time because it will save my time. And now, since you have got an idea about the transactions and the entries, even if I'm doing it two accounts at a time, you will be able to understand the entries. In the previous classes, it was your first experience with the accounting part, the cost accounting part. I was avoiding doing this. But these are small techniques, you can say tricks, which helps you uh, write or complete more during the exam limited time. So once you are well versed with the transactions, you should take three transactions at a time if they are of similar nature. Now this is something interesting, depreciation of assets which are in addition to overheads. Now here they have not mentioned what assets are these. So for the time being, I assume this asset to be plant and machinery. Now the overheads figure, that is the depreciation on plant and machinery, is 500. Now what is our regular entry for depreciation? It is depreciation to fixed asset. However, in this, since you have depreciation provision account, so what is your accounting entry? Depreciation to depreciation provision. Now we substitute this accounting entry to our cost accounting entry. Now in cost accounting, you have no account called as depreciation, but depreciation is what is shown as overheads. And since, as I said, I'm assuming it to be plant and machinery, which you should also assume if nothing is mentioned, this will be production overheads. So this is how my depreciation will be shown in the production overheads. And the second effect will be to depreciation provision. So my entry is depreciation to depreciation provision. So the second effect goes here. Correct? There are many things in chat. So let me see. Okay, so people are posting entries. This is good. Students, you may start posting further entries also. Julie Beta, your entry is not correct because it was given that material is purchased on credit. Even if you remember accounting, one of the fundamental assumptions of accounting is that we follow the mercantile system. So even if nothing would have been given, they would have simply said material purchase. We should have, or we should pass it through creditors only. But here that assumption is also not required because they have specifically given it is on credit. Prajapati Digambar Bhai, your entry is not correct, beta, because means actually it is correct, but it would have been correct had we be doing non-integrated. Today, since we are doing integrated, there is no cost ledger control. Now there are specific assets and liabilities account. So instead of cost ledger, you should credit it to the specific asset and liability, which here is creditors. Gunjan Devi, firstly, you are not debiting purchase, you are debiting the materials account, which is called as the stores ledger control account. Now, what you are asking, sir, what is the effect of purchase? What do you mean by this? What is the effect of purchase? See, purchase, whenever you make, it is of material. So it is debited to the material or the SLC account. I did not get your question. Yes, Mustafa. So give me the entry. You are correct. Give me the entry, Mustafa, for wages. Care we beta. See, understand this. I had mentioned this in the previous class that when you are doing your financial accounting, which is your normal or regular accounting, we open around 50 accounts for different expenses. So students, pay attention. In your financial accounting, you open separate account for each expense. Like for wages, like for labor, you have wages. Within wages, you have a direct wage account, indirect wages account, you have salary account, you have different types of labor, welfare, and labor expenses account. So you open separate account for everything. However, in costing, we only have material labor expense, and then expenses are further bifurcated into production overheads, administration overheads, selling and distribution overheads, all the indirect expenses. Now, we do not have carry overheads account in our cost accounting. So overheads has to be classified in one of these five expense accounts. What are the five expense account we have opened? For material, we have opened SLC, that is stores ledger control. For all expenses relating to labor, we have opened the labor cost control, that is LCC. And for all indirect expenses, which we call as overheads, we have opened production overheads, administration overheads, selling and distribution overheads. Now, Care you have to decide that depreciation is what? Is it material? Answer is no. Is it labor? Answer is no. So by default, depreciation is overheads. And within overheads, it is which overheads? It can be any three because depreciation is an expense of fixed asset and fixed asset may be required in all the three departments, production also, admin also, selling also. That is why if you remember, I've assumed in the question and I've asked you all also to assume that this depreciation is pertaining to plant and machinery. Once you assume this, by default, where it will go with a production overheads. Correct, Kervi? Very good, Deepika. Give me the other entry also because wages will have one more entry. So, Deepika, you're right. What is B slash D, Mustafa? What is D? Very good, Julie. Very good. Your answer is perfect, beta. Very good, Medha. Complete the other entry also. Now, students, remember this. This you would have understood in the previous class also that whenever there is wages, wages will always have two entries. One for wages incurred and second for wages charged. This is the only transaction which will have two entries to be done by you. So first I pass entry for wages paid. Now since they have specifically given paid, I will debit the LCC and I will credit the bank because they have said paid. And the total wages paid is 12,000, out of which 10,000 is direct. So you can very well understand balance 2,000 is your indirect wages. Correct? So this is the breakup. But firstly, I will debit the entire LCC account saying to bank 12,000. Now I'll do the second effect also immediately by myself. So please remember the students that you have to do this by yourself. So in labor, you'll pass both the transactions. So debit for labor incurred, and then I'm charging this. Direct will go to WIP and indirect will go to POC, and this account is closed here and out. Now I'll do the second effects, which you should do without fail, without missing out anything. So you'll have to develop these small things for exams so that your solving is fast. You cover more entries. Correct, students? The entry for labor. Now next is finished goods produced and finished goods sold. Now you'll have to remember, whenever you are producing finished goods, the goods are moving from factory to go down. And whenever you are selling, they are moving from go down to customer. So these two entries, 30,000 and 32,000, one is for produce, one is for sold. Anybody would like to give me these entries? You can give me all further entries also, so that I will understand that you are understanding. So in the meantime, when I'm passing an entry or I'm explaining some entry to someone, you can start posting the further entries in the chat box. Very good, Himanshu. You are correct. Give me the other entry also for finished goods sold. Mustafa, you are right, beta. Logically, give me the entries. Harsh, the entry, what you have written, if you are not writing the entry, if you are just explaining in language, it is correct. But entry wise, you have to give me the debit credit. But Harsh, language wise, what you want to say is correct. But give it to me in the form of ledger entries or journal entries. Perfect, Himanshu. Both your entries are perfect. Very good, Julie. Give me the other entry also. Yes, Deepika. This is the first or the second transaction entry, Deepika. First transaction is finished goods produced, second is finished goods sold. So second one, beta, then the entry is wrong. Apply our principles of debit and credit. So what is going out, or the account which is giving has to be credited. The account which is receiving has to be debited, Deepika. Recheck. No, Ishwarya. Bank will not come here. Bank, nothing has to be done in bank. Okay, Mustafa. But then don't write by. If you're giving me journal entry, then it will be debit credit, na? To and by we write in the postings. Yes, Shamli, this is perfect. Give me the next entry. Keravi, perfect. Nothing to be sorry, beta. Mistakes are okay. There's nothing to be sorry for giving a wrong answer. That is fine. We all are studying. We all are students. That is the biggest advantage you all have. So make mistakes. That is not a problem. But at least start answering so that you will also realize whether your understanding is right. And if something is wrong, I can correct you. So give me the right entry. Deepika. Julie, this is not correct, beta, because it is cost of goods sold. Understand, students, this is not the entry for sales. It is the entry for cost of goods sold. Had it been entry for sales, we would have thought of debtors or bank. Entry for sales is different and entry for cost of goods sold is different. Yes, cost of goods sold represents the goods which are sold, but it is at the cost price. And once it is at the cost price, it cannot be routed through your debtors, because in debtors, we will have the entry only of the sales value. Correct? No, Ishwarya. Where is stock control account involved, beta? Stock control is for material and this transaction is for finished goods. Okay, Harsh Kumar Kaur, beta, give me the complete entry. Cost of sales to FSL. Meenu Kumari, but I have not understood. And which transaction you are talking about, first or second? No, Deepika. Where is overheads involved, beta? We are talking about finished goods. Students, please understand the transaction. Perfect. No, then Medha, what is inventory account? Do you mean to say finished goods? Use the correct terminology, beta. You are correct, Mustafa, beta. So, but if you have to give journal entry, how do you give journal entries, Mustafa? You're logically, what you're saying is correct. So, students, now, when goods are produced, see, this is factory, this is your godown, and this is your customer. So, when goods are produced, they will move from here to your godown. So, the entry will go from here to here, correct? And when they will be sold, the cost of goods sold will go from here, that is from godown to customer. Correct, students? Deepika, debit credit again, check who is the giver, who is the receiver. Applied the debit credit rules. Julie Kumari, perfect. Okay, Medha. Ishwarya, yes, perfect. Finished goods, debit. Okay, you are giving only part entry, Harsh Kaur. But a debit credit both has to be given na, for complete entry. Perfect, Jaya. Perfect, Kuldeep. Okay, correct, Pooja. You have missed 1-0. Good. Perfect, Pooja. Perfect. Start posting further entries. As you complete, start posting. Now, we come to the further part of the entries. Now, the next transaction is sales value. Now, this is talking about sales. So, in the previous entry, it was goods sold but at cost. So, we routed it through the product accounts. Now, when it is sales, we have to pass the entry for sale. What is your accounting entry for sales? It is debtors or bank to sales. Now, here we have debtors account. And as I said, since we are assuming mercantile, this is what is our standard assumption, our fundamental assumption. Hence, if nothing is given, you will assume it to be routed through debtors and creditors. You will not assume it routed through cash and bank. Please remember this. This is Beta Mustafa. I'm telling that if you are giving me journal entries, you have to write WIP, credit, finished goods, debit. That way I'll understand the journal entry now, because right now what you are writing is not giving me the journal entry. At least I am not able to understand that journal entry. So if you are giving me journal entry, give it in the form of journal entry, how we write debit and credit. Ishwarya, you are correct, but wait. Now students, so our entry is we have debtors account, debit. That is now for sure. And here we have debtors account because it is integrated. Now comes the second part, which is the second, that is the credit entry. So what we pass entry is debtors to sales in our financial accounting. Now we have debtors here, but we do not have sales. What we do for sales? We simply pass on the sales directly in the P&L account. So instead of sales, what you have is your cost P&L account. So our entry will be debtors debit to cost P&L for sales. Correct? We have been posting sales directly in our cost P&L. So here I will have buy debtors. This is for the sales. Just for our reference, I'm writing in bracket, and I will put it in the debit side of debtors. So to cost P&L 40. Correct? Okay. You will not use students cost of sales account. Please keep this in mind. Cost of sales should not be used. We should use the debtors account and the cost P&L account. ठीक है. At times people use cost of sales account, but it is recommended that you do not use this cost of sales account. You should use directly the debtors and cost P&L account. Is this fine? Understood by all? Clear है? आगे बढ़े. Perfect, perfect. Great. Now give me further entry, students. Now the further transactions are overheads incurred, overheads charged. So you can give me entries for incurred and charged both. Okay. Shamli has given. Very good, Shamli beta. Chalo, others, give me this entry. No, Mustafa beta. Perfect, Himanshu. Kuldeep beta, which method of accounting we are doing? Is it integrated, non-integrated? Check that. Again, Minu Kumari, you are right logically, but tell me one thing. Are we having CLC account here? So if we are not having CLC, why? Because this is integrated. In integrated, we have the respective asset and liability account. So where will it be credited? Mustafa, this is what I wanted. Now, when you are writing debit credit check, what will be debited? Whether expense account is debited or credited. And bank, whether money is coming into bank or going out of bank. Perfect, Julie. Yes, perfect. Both transactions, both entries are perfect. Only I'm sure you'll understand that the second transaction which you have posted, the amount will be different because you have a different amount of overheads charged. Himanshu beta, see which is the account for office overheads. You should know the parallel names. Like for production, what are the parallel names? Factory overheads, production overheads, manufacturing overheads. Similarly, for office overheads, what is the parallel name? Himanshu. Ishwarya, why it will be debit, why it will be to WIP account. The second one is correct, na beta. Pooja, beta, is money coming into bank or is it going out of bank? Follow our accounting principles, na? Debit what comes in, credit what goes out. Perfect. Now you're right, Ishwarya. So, students, yes, correct, Himanshu. Now you're right. Perfect. Karavi, if you are saying charged, how can charged have bank? Bank will be where there is incurred, na beta? Correct, na, Karavi? We know how it can be POC. So it will be debit also POC and credit also POC, Minu. Now, for expenses incurred, what will be the entry? Respective expense account debit to bank. Now, had this been non-integrated, we would have written to CLC because CLC represents bank also, debtors also, creditors also. But since it is integrated, it will be to bank. So same transaction in non-integrated is routed through CLC. In case of integrated, it is routed through bank. Shamli, why cost P&L beta? Ishwarya, why you will debit bank is money coming into bank when you are charging the overheads? Charging is done to product accounts. We charge expenses to products. So I'm passing the entry first for overheads expenses incurred. So it will be to bank. 6. It will be to bank. 1. It will be to bank 1. And I'll credit all this in bank. So by POC, AOC, SNDC, it is 611. Now, when I have to charge these expenses, expenses are charged to products. And if you remember, there are 3 product accounts and 3 overheads accounts. So each product account will be debited with 1 overheads. Now, since now we are charging overheads, so overheads accounts will get credited and the respective product account will get debited. Correct, na? I hope this is clear, students. Perfect. Oh, good, good. So, students, for overheads incurred or any expense incurred, what is the journal entry? Expense account debit and cash bank account credit. And when you have to charge, it is charged to respective products. So you have 3 product accounts. So debit all the 3 product accounts and credit the respective overheads accounts. So see, now I will charge them. So it is by WIP 9. by FGC. $1.8 by COS 1.7. Correct? So 2 POC 9, 2 AOC 1.8, 2 SNDC 1.7. So 3 product accounts, 3 overheads account. Correct? Now all entries are done, right? Now, once all entries are done, we can close these accounts. So now we'll close all accounts one by one. So the material account, which is SLC, we will have balance carried down. So 16 minus 8, 8. Correct? LCC is already closed. In POC, now the difference is under over absorption. That will go to cost P&L. So debit is 617, 7.5, 9.5. So 0.5 is your difference, which will go to cost P&L. So 2 POC 0.5. Same thing. Here debit 1, credit 1.8. So there is overcharging. So it will also go to cost P&L. 2 AOC 0.8. Correct? Then here 1.7. So again, the difference will go to cost P&L, that is 0.7. So we see the posting mistake I did. This was credited. So 0.8, 0.7. So it is debited here, hence the second effect is credit, right? So these accounts are closed by transferring the difference to your P&L account, because the difference represents under or absorption, and under or absorption treatment is by transferring it to P&L. Now, for WIP, we will have balance carried down because this represents my stock. So it is 6.57. So it is 13, 23, 23, and 932. So it is 2.5. Correct? Again here, 34, 35.8. So it is 3.8. Now, COS, it will go to cost P&L. So it is 33.7. And it will be debited here, 33.7. Correct. Now I'll have the difference here of net profit, which will go to general P&L. This is of net profit. Correct. So how much is on the debit side? It is 41.5. Correct. And on the credit side, so it is 7.3. Students, please check and correct me. Net profit is 7.3. By cost P&L 7.3. Good. Perfect. ठीक. Now, debtors, creditors all will have balance carried down. So 41 minus 35 is 6. Creditors, 12 minus 6 is 6. Fixed asset remains same, balance carried down 102. Depreciation provision, balance carried down becomes 3. Capital, balance carried down 110. General P&L, balance carried down 15.3. And now bank 18, 24, 26. So by balance carried down 26 minus 38. Closing balance is 12. Please check and confirm, students. Perfect. Perfect. Bank balance is 38. Ditya, let me check. Is it 38? Okay, Mustafa, you can plan accordingly. Whatever you find more convenient in the exam, you should do that. Okay. So bank balance is 38. You all are saying, students? I'm getting balance in bank as 12. Okay, total is okay, but I'm more interested in the balance. Total, anyways, I'm not writing. Perfect. So students, this is about integrated accounting. I hope you all have understood. Correct? Those who want can take a screenshot of the entire question. Done? Perfect. Now let us go to the next part of this chapter, which again is very interesting. So this was the accounting part. Now we have the reconciliation part. Reconciliation of profits. Now you will say, sir, which profits? The answer is reconciliation of profit as per cost sheet with profit as per financial accounting. So please understand what we are trying to compare, because until and unless that is clear, it will not be clear how to do the reconciliation. And today I'll teach you a very interesting approach for reconciliation, which you can use in other subjects also, like income tax will require it, like accounting you'll require it. So wherever you require reconciliation in any subject which requires reconciliation, this approach can be followed. But before that, now you all have studied cost sheet, right? Now in cost sheet, what we do, we have all the expenses. I'm just writing the names. I'm not writing the actual cost sheet. So you have all these costs in a sequence. Also, you have opening closing stocks. This gives you your COS after adjusting stocks and everything. And when you adjust sales, the balance is the profit. Correct? Now, if you observe, I'll also write the stocks just for our reference. So we have opening closing WIP. We have opening closing FG. And here we have opening closing raw material. Now, please pay attention, students, to understand. Acha, cost sheet, everybody's through. If you are through cost sheet, then what I'm explaining will be very easy. So in costing, the expenses that we are considering in the cost sheet are expenses charged. And what is charged? If you remember the material labor overhead chapter that we did at the start, you take the base, like for material, the base is units, for labor, the base is hours, and for overheads, the base can be different bases, and you multiply it by the charging rate. It means the amount which is put in the cost sheet is expenses charged figure. Expenses charged is a mathematical figure. It is not your actual expenses. Compare this with your trading and P&L account. In fact, manufacturing also. Now in this, we have again debit opening stocks. You have raw material, you have WIP, you have finished goods at different stages. Like raw material WIP will be in the manufacturing account, finished goods will be in the trading account. Correct? Credit side also you have the closing stocks of the same thing in different accounts. And then you have purchases, direct wages, direct expenses, manufacturing expenses, correct? All this is in the manufacturing account. And in the trading account, then you have, if you are a trader, you will have purchases here. If you're a manufacturer, the factory cost is transferred from here to here, correct? Na? We call your 11, 12 standard days. And in the P&L, you have all the expenses list, printing stationery, rent rates and taxes, repairs and maintenance, depreciation, and so many things. Now understand, students, the debit side of your P&L is also covering expenses, but it is covering expenses incurred. So here you have charged expenses, which is a mathematical figure, and expenses incurred is your actual figure. This and this will not match always because expenses charged is on estimated basis using the formula. Expenses incurred is on real basis. As you go on paying expenses, you get the figure. So whatever net profit we are getting here and the net profit we are getting here will not match. Why? The first reason for difference is expenses. How? Cost accounting and financial accounting. Cost accounting takes expenses charged figure, whereas financial accounting takes expenses incurred figure. Expenses charged is on estimated basis. It is a mathematical figure. Expenses incurred is your actual or real figure. So first difference between both the profits is because of the expenses. I hope this is clear. Then the second thing, if you compare the stock values that we have in both, correct? We have stock values everywhere. So we use stocks here also, and we use stocks in our cost sheet also. But the difference is, since the expenses figures in cost sheet are estimated expenses, so obviously the stock figures which we get, all the three stock figures and opening closing, are on the basis of expenses which are charged, that is the estimated basis. Whereas the stock figures which you get here and here, correct? Na? all these three stocks, opening, closing, and debit credit, all these stock figures are taking actual real expenses. So the second difference is of valuation of stocks, all three, raw material, WIP, FG, and both opening and closing. Here again, because we are going on estimated basis, by default, the value of stock is on estimated basis, taking the estimated expenses. And here, since you have taken actual expenses, the value of stock will also be actual basis actual expenses. So again, there will be difference in stock values also. Now, please understand mathematically, if your stock values in both these statements are at different value, the net figure which we are getting here, balancing figure, the net profit will be affected or will be different. So the second reason for difference is this. Then third reason is we have financial incomes and expenses. It is not present in cost sheet, it is only present in financial accounts. What are financial incomes and expenses? In your financial accounting, you debit many provisions, reserves, dividend, interest. All these are financial expenses. You never find any of these in cost sheet. Cost sheet never records provisions, reserves, dividends, etc. We do not consider them as cost. Similarly, in P&L on credit side, you have other financial incomes like rent, dividend received, interest received. You have so many other financial incomes also. Now, these things are again not considered in cost sheet. So the third reason for difference is you have financial income expenses here, but you do not have it in cost sheet. And the fourth reason is notional. Cost sheet considers notional expenses, like if the proprietor or the owner of the business is himself working in the salary or in the labor, we will consider the salary of owner, proprietor. But do you any times consider proprietor salary or rent paid to proprietor? Answer is no. We have been taught from standard 11 in accounts that proprietor is same like the business. So if you are paying any salary to proprietor, any rent to proprietor, it is not to be considered as an expense. But cost sheet says, since his efforts are required, since his resources are required, we will take the figure on notional basis. Notional means in reality you are not paying anything, but cost sheet is on estimated basis. It is not on the actual figure basis. So the fourth reason of difference is you have notional expenses here. You do not have it here. Now, these are the four broad reasons which causes difference in the profit figures, profit as per cost sheet, profit as per financials. Now, what is reconciliation? Reconciliation is, see, both these are correct in their place. Nobody is wrong. But the principles on which cost accounting is done and the principles on financial accounting is done are different. As you can see the difference. Both have their own principles, their standards, their rules. So both are correct in their place. But if I'm having the same business and for the same financial year, if one of my books is showing X profit and the other books are showing Y profit, I just need for my understanding what is the difference between the two and let me match the difference. The matching of this difference is the reconciliation. I hope you are getting this. Now, when we talk about reconciliation, you all remember the format. So here also we have two formats. One format you have studied, which is the reconciliation statement. Here I will call it as the profit reconciliation statement, where we start with profit. Now, whatever it may be, either as per cost sheet or as per financial P&L, whatever is given. and we end with profit as per the other books. So if starting point is cost sheet, then financial P&L will be the end point. If starting point is financial P&L, cost sheet will be the end point. And then you will have figures which will be added. You will have figures which will be subtracted, figures of difference between the two. Correct now? I'm not saying anything new. This is what you have been doing right from your standard 11 days. Correct? Now, what is new over here is we have another format of reconciliation, which is the memorandum reconciliation account. So instead of doing the reconciliation in a statement form, here we are asked to do this reconciliation in the account form, ledger account form. Now, when you're doing reconciliation in the account form, now what will be your format? Now the format will be whatever is the starting point. Let us say starting point is profit as per cost sheet. Now, please remember students, or rather I'll say recall, profit has a debit balance or a credit balance. Tell me, if you feel it is credit, write C. If you feel it is debit, write D. Profits have which balances? Debit or credit? Perfect. Minu, correct. Julie, correct. Medha, Himanshu, correct. Jaya, correct. Kuldeep, correct. So profits have credit balances. Now, if it is a credit balance, I will start from here. By profit as per, let us say your starting point is cost sheet. So if your starting point in reconciliation is cost sheet, we all know profits have credit balance. So you will write it here saying by profit as per cost sheet. Now, simple logic. We add certain differences in reconciliation. Now, if I have to add certain differences, it will be added only if I post it on the credit side. So in the reconciliation statement, whatever you want to add in the memorandum reconciliation account format, you will post those differences on the credit side. So what we used to write here as add, or what we will be writing now as add, you will do the same thing here by writing it as buy on the credit side. And the differences which you want to subtract, you will post it on the debit side saying 2, because debit side entries are past, writing 2. So interestingly, the add items will be posted on the credit side. The less items will be posted on the debit side. And now this, the balancing figure will be on the debit side, profit as per financial P&L. Are you getting the format, students? It is very simple. Perfect, Meenu. Yes, Geeta, correct. So I repeat, you have the reconciliation statement, which you all know already. We take one of the figures as starting, we add, we less, we get the other figure. So either you solve it by this same statement format, but many times at this level, at your CA inter and final level, you are required to do it in the reconciliation account format. And where it is in the account format, nothing special is required. You just need to simply follow the account format of debit side, credit side. And how does this account format works? It will work by this simple mechanism. That is, first, you have to write the opening balance. That is the starting point of your reconciliation. Now, if the figure given is profit as per cost sheet. And we all know the opening balance of profit is a credit. So we will put it on the credit side. Correct? First point. Now, whatever has to be added, because when you are doing reconciliation, certain things are added, that you will post on the credit side so that it will automatically get added to this figure, which you have already put as the opening balance of profit. And whatever is to be subtracted, that you will put on the debit side. So automatically this will get subtracted from the opening balance figure of profit. So the net balance, you will get the profit as per the other statement. So here I'm assuming starting point is cost sheet. So end point will be financial. Other way around, starting point is financial, end point will be cost sheet. Correct na? Harsh, beta, in exams, you will do what is asked. If they ask you to prepare statement, you will prepare statement. If they ask you to prepare reconciliation account, you will prepare account. And if they don't specify, then it is your choice. But I will suggest that you should follow account format if nothing is mentioned in the sum. And if it is mentioned, then you have to follow that format only. Perfect, students? Clear to all? Good. Excellent. So now once it is clear, let us solve sums. Now, while solving, the most important question is add and less, right? So let me take a question to explain that. Again, you will take a screenshot of question 5. I have uploaded this, but still in case you have not yet downloaded it, just take a screenshot. Done. Now see what they have said. They have given the starting point as profit as per cost accounts. Correct? Na? Now, if the profit is as per cost accounts, we will also start considering profit as per cost accounts, right? What is happening? Yeah, I'm having some problem with the system. I'm not able to see the cursor when I'm in this sheet. Somehow my cursor is not working here in the sheet. So I'm not understanding what is getting clicked. Okay. Now, students, let us solve this. And with this example, I'll explain you the format also, the memorandum account format also, and most important thing is add less. So let us first decide the add less. Now see, my starting point is cost accounting profit. So this is very important. What is your starting point? Now, to decide add less, you have to first understand the meaning of these. Now see, these are the differences. What is the difference given? First difference is work overheads. Now again, see parallel names. Work overhead is a parallel name for factory overheads. It has said it is under recovered. For administration, it is saying it is under recovered. And for selling, it is saying it is over recovered. So firstly, understand what is under recovery and over recovery. Until unless you understand this, you will not be able to understand the add-less that we are going to do. Okay. Now see, I was explaining that here. What are the reasons for differences? You charge in costing taking the mathematical formula, which is on estimated basis. And in financial, you debit the actuals. Now, the difference between the charge and actual is the under over recovery. Now, remember one thing, parallel words for recovery is also absorbed, is also charged. So again, you should be very well versed with the terminology. Many times you know the concepts, but you do not know the names. That is where also you make a mistake. Like for overheads, you have multiple names: factory overheads, production overheads, manufacturing overheads, works overheads. All means the same. Similarly, you have the office overheads, administration overheads, management overheads. All mean the same. Office, administration, management all mean the same. Now, pay attention. So the point is that when we are talking about recovery, recovery is also absorbed, recovery is also charged. Now, we charge figures or expenses in costing. This is clear. We do not charge this in accounts. You have never heard this word charge, absorbed, recovered in accounts. So when we put any expense in cost sheet, what we are doing is we are charging it. We are charging it to the product. Now, when they say it is under recovered, it is under absorbed, it is under charged. Correct? All mean the same. So under recovered means under absorbed, under recovered means under charged. Now just pay attention to the terminology. When they say something is under recovered, it means that expense is charged less. That is why it is under recovered. Less as compared to actual. So whenever they are saying under recovery, it means the expense is less in costing as compared to financial. Correct? Similarly, if they are saying over recovery, it means over absorbed, it means overcharged. Means what? The expenses is more in costing, because in costing only you charge. So if they are saying over absorbed, over recovered, overcharged, it means the figure is more in costing as compared to financial. Correct? Na? To understand this, now, once this is clear, now will come the most important part in reconciliation. Please pay attention. Now, what I'm going to show you is what applies to all subjects wherever there is reconciliation. So we reconcile two values. Here, my one value is the profit as per cost sheet. The other value is the profit as per financial plan. So please be clear. Costing profit, financial profit. These are the two values we are reconciling, we are matching. This is what? Costing. This is what? Financial. And both these are profits. Please be clear. Correct? Now, if I'm saying some expense, let us say factory overheads, is under recovered. Please understand what does under recovery means. It means in cost sheet, the expense is less. I just explained. Under recovery, under charge means the expense is shown less in costing, because in costing, what you do is called as charging. So if I'm saying under recovery, it means the expense is less in costing as compared to financial. Correct? This is what I just explained. Now, please pay attention. Don't make a haste. If my expense is less in costing, and these two figures are figures of profits, please be clear. If my expense is less in costing, what is the effect of this? If I've shown expenses less in costing, it means my costing profit is higher as compared to financial. I hope this is clear. I repeat, if my expense is less in costing, it means my profit of costing is higher as compared to financial. Correct? So it means because of this adjustment, I have these values of profit. Profit of costing will be higher because expenses charged are less, and the profit of financial is here. Now comes the reconciliation. Now you will see in the sum, what is your starting point? Now in this sum, my starting point is cost profit, correct? So I'm standing here and I have to reconcile and reach here. So my starting point is cost profit, which is higher, and I have to match it with this. So I'll have to come down. Come down means it will be less. Understood? So if I have to come down, it will be less. Correct? So I will mark here. So this is how I do reconciliation. I first mark everything here. So I'm marking it as minus. Next expense is administration overheads under recovered. Same. Profits, costing, financial. Right? Now again, the expenses are under recovered, under charged. Where does recovery or charging happens? In cost sheet. These are values of profit. Be clear. Don't haste. So if expenses are under recovered, means expenses are less in costing. So what will be the impact on costing profit? It will be higher as compared to financial. My starting point is costing profit. So I have to come down again less. Correct. Now coming to selling and distribution overheads. What it is given for selling and distribution overheads? They are over recovered. Over recovered means overcharged. Again, where this recovery and charging happens in costing, you charge the expenses, you recover the expenses. Costing does the recovery. Now it is under recovered. Please understand, if expenses are, sorry, over recovered, if expenses are overcharged, over recovered in cost sheet, what is the impact on costing profit? Costing profit is less. Why? Because we have taken higher expenses. So when the expenses are higher in costing, that is the charge or the recovered amount is higher, the costing profit is less. So now this is my figures of profit. Costing is less, financial is more. What is my starting point in the sum? My starting point is costing profit. So I have to go upwards. I will add. Today this is not working properly. 1 second, let me close it and restart. Now it is much better. Now, yes. So this is less. This is add. I hope this is clear to all. Now coming to bad debts written off. Students, please be clear. Firstly, we never show bad debts in cost sheet. So bad debts is a financial item not appearing in cost sheet. It only comes in financial P&L. Now again, these are profits. This is costing profit. This is financial profit. Pay attention. Now we are talking about bad debts. Where is bad debt shown? Bad debts is shown in financial books only, financial P&L only, not in cost sheet. Now bad debts is an expense and it is only shown in financial. So if you are showing expense in financial, what is the impact on this? See, these are profits. Keep this in mind. So financial profit will be less because you are showing expenses in financial and not in cost sheet. And since financial profit is less, this is the figure of my profits. Now again, what is the starting point in this sum? It is cost sheet. So I will come down. It will be subtracted. Correct? Now we come to the differences in valuation of stock. Now what they are saying? Overvaluation. So you understand over means excess valuation. And it is of which stock? Of opening stock. And in which books? In costing books. Now again, please be clear with this. So these are profits. Correct? Costing profit, financial profit. Now we are talking about stocks. If you're talking about opening stock is a debit item. We all know. We always put it on the debit side of P&L. So opening stock is a debit item. Fine. Okay. Now this opening stock is overvalued. It means the debit is more. Now we all know if the debit is higher, the net profit would be lower. So please be clear. Don't make haste. So I have not yet moved my hands because I need to first understand what is the impact of that adjustment, that difference on my profits. So it is an item of opening stock. Opening stock is a debit item. Perfect. And it is saying it is overvalued. If if debit is overvalued, it means the profit will be less. Now, which hand I will move? I will move the hand where this overvaluation has happened. It has happened in costing books. So my cost profit is affected. How? If the expenses are more, because opening is a debit item, opening stock is a debit item, so it is like an expense. So it is more in cost sheet. So my cost profit is less. Now, once I get these levels, now you'll see what is the starting point of this question. Your starting point given in is cost P&L. So if it is cost P&L, now I'll have to go from cost to financial. So I will add. Next is overvaluation. Now this is of closing stock and it is in costing books. Again, profits. Now we are talking about closing stock. Closing stock is a credit item and it is overvalued. It means credit is more. Now we all understand that if credit side is higher, your net profit would be higher. Now this is happening in which books? It is happening in costing books. In costing books, the closing stock value is higher. If closing stock value is higher, it means cost profit would be higher because closing stock is a credit item, and if credit is more, profit is more. So it means because of this particular entry, because of this particular difference, your cost profit is here, your financial profit is here. What we have to do? My starting point in this sum is costing profit, so I'll have to come down. So I will subtract. Now, these two are financial incomes, interest earned, rent received. These two are incomes. These are financial. Why? Because they do not appear in cost sheet. Again, costing profit, financial profit. Now, these two are financial incomes, so they are going to affect my financial profit. How? Because of these two incomes, since it is there only in financial books, my financial profit will increase. So my financial profit is higher. Correct? So I get the levels of profit for these two items. Now, my starting point in this sum is costing profit. Since it is costing profit, I'll have to go to financial, which is upwards. Then coming to preliminary expenses, which is written off. It means it is an expense. Where again in financial books only, because in costing books, we never show preliminary expenses. We never show all these items. These are only financial books. Now, what is the impact? Since it is an expense and only recorded in financial books, my financial profit will be less. So this is the level, costing profit, financial profit. Now, what is my starting point? My starting point is costing profit. I will come down less. So this is how I decide the add less adjustment in reconciliation. This technique, which I just explained, can be used in any subject, in any chapter, wherever reconciliation is required. Now I'll go through your comments. You'll have been posting many comments, but since I was explaining, I was not referring to your comments. Now let me go and check your comments. Yes, Kuldeep, beta, you can say so. Meenu Kumari, I did not get your point. Last point, what you explained. Mustafa, you're right, but how will you identify? You are saying add all profits and gains and less loss. That is not so straightforward, beta, because you have two profits, financial also and cost also. And in both, you'll have to see what is the impact of what is shown where. Jaya, under recovered means in costing the expense charges less. Meenu Kumari, beta, opening stock is a debit item, correct? And if it is given opening stock is overvalued, see, it can be given anyways, over, under, whatever. So first understand opening is a debit item. We show it on the debit side. And if the question says it is overvalued, it means your debit side is higher. Now just equate opening stock with expense for simplicity. So opening stock is expense because it is a debit item and it is higher. It means expense is higher. So what will be the effect on profit? The profit is lower. So you get to know that because of this adjustment, like in this case, since opening stock is higher, it means my profit is lower. Which profit is lower? Costing profit, because opening stock is overvalued in costing. So my costing profit is less. And then accordingly, once I decide the hands, which one is higher, lower, I will start from one hand to another. Which hand I will start from, that depends upon what is the starting point. So since the starting point in this sum is cost accounting, my hands will always start from costing profit and go to financial profit hand. Correct? Perfect. Now we will do this in our reconciliation statement. Correct? So this is my memorandum reconciliation statement format. I'll just use the short form. Starting point is profit as per cost sheet. So I'll write profit as per cost accounts. 145,500. Now, whatever we have decided as add, I will write it on the credit side. Whatever we have decided as less, I will write it on the debit side. Correct? So first item is works overhead under absorb, administration overheads under absorb, both are less. So I'll write it here. Works overheads under absorb. Then administration overheads under absorb. Figures are 9,500, 22,750. Now selling overheads is over absorb, which I have done add. So selling overheads over absorbed. How much is the amount? 19,500. Then bad debts written off, this I have done less. So I will write it here. Bad debts written off. So 9,000. Correct. Then overvaluation of stock I have added. So overvaluation of opening stock in cost accounts. So 15,000. Again here less to overvaluation of closing stock in cost accounts. How much is less? Less is 7,500. Then interest earned, rent earned I have added. So interest earned, rent earned or received is added. So it is 3,750 and 27,000. And preliminary expenses is to be subtracted. So preliminary expenses written off 18,000. Now after doing the postings, whatever is the balancing figure, that will be profit as per financial P&L. Perfect, students. Good. Okay, Prajot has given me one answer. Let me check with other answer. Shamli has also given. Harsh, but I am purposely showing the reconciliation account because that is new to you. If you are asked statement, you'll prepare statement, Harsh. But obviously, I'm showing what you all don't know. So I have prepared reconciliation account so that you'll understand the format. Correct? You can put it in the statement format if that is asked in the question. Medha, I am given other answers by the other students. So please recheck. Ishwarya, the answer given is different to me by other students. Yes, Jaya. Yes, Pooja. Yes, Shri Kumar. Yes, Deepika. So answers given by majority of students is 144. Others, please cross confirm. Perfect. 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 Great. Super. So students, this is what is reconciliation. Very interesting concept. And just remember the method which I have explained. The moment you understand that method, solving reconciliation will become easy for any subject. Follow the method I have shown of hands. Correct? So now we take a break of around 10 minutes and we reassemble for the next part. Right? Okay. Now, we have one more topic to be covered today, which is a small and a simple one. So I'll take up that topic now so that it can be completed as per our schedule. So the topic is, now it is a separate topic as per our module, but it is nothing but cost sheet. So what is this unit and batch costing? Let us understand. See, Aditya beta, we are getting 144. You please recheck how you are getting 134 beta. I've already solved this sum. Okay. Now, we have something called as students, methods of costing. What are methods? Now, this is a theory part of chapter 1. Now, since you have understood so many topics, you'll understand this easier. So methods of costing means, if I have to put it in a very simple layman language, it is the format. Now, when you are doing costing, as you have seen, we prepare cost sheet in a specific format, correct? Now, this format will change depending upon the nature of business. Harsh, beta, don't worry. There is nothing new. If you have studied the cost sheet chapter, what I'm going to explain in this chapter is everything is cost. But we have completed cost accounting. It is already done. Now you have to practice at your end, beta. I've explained everything which is part of cost accounting. So don't worry. Now, and see, all these chapters are complementary. So there is nothing which will be rival. You can understand both together, right? So beta, practice you have to do, na? Now, depending upon nature of business, we will require different formats. Like broadly, firstly, your business is of manufacturing goods or providing services. The first difference is here, and by default, the format will change. So if you are into service sector, like into transport or banking, or you are into coaching classes, or you are into any type of counseling, you are a doctor, you are running a bank, insurance, mutual funds. So all these are service providers. For them, the method of costing or the format of costing is what is called as operating costing. Now, since it is a service sector, the format of cost sheet will not be the same what you have studied. What you have studied is mainly for the manufacturing sector, where you have prime cost, in which you have direct material, that is raw material consumed, direct labor. In service sector, that is not the case. There is no raw material consumed. There is hardly any direct labor. It is majorly all expenses. And since it is a service sector, there will be no manufacturing overheads. So that is how the format will change. Within goods, you have standardized or you have customized. Now, within customized means you work as per the orders. So the method is job cost sheet. And when it is standardized, the method is batch cost sheet. It may be even unit or product cost sheet. And then you have something Like for people engaging in construction, you have a contract cost sheet. People who are doing the work in stages, their production is divided into different stages. We have the process costing approach. So you have different types of businesses, and depending upon the type of business, you have different formats. Now, this, what we are going to discuss today, is nothing new, nothing different. Whatever cost sheet you studied in your college, whatever orders as per the specific directions, specifications, design of your client, it is a job. So we call it as job cost sheet. And when you have your own standardized products, which you make in batches, like you today find any FMCG product that you see, which may be medicines, which may be your all types of chips, wafers, chocolates, you will find batch number written on the wrapper. Why? Because they are manufactured in batches. So that is what is a batch cost sheet. And if you're having a single product, you will have a single product cost sheet. So it is nothing new as far as the working or the formatting is concerned. The only thing is you should understand the names and the categories. So our today's topic, what we are going to study, I don't have to explain you anything different as far as the solving is concerned. It is totally copy paste of what you studied in cost sheet chapter. Only the thing is that today we are realizing that that cost sheet is also applicable to job industries, that is also applicable to industries doing their production in batches. So see, so when you have unit costing, where your but where your production have multiple products. So you do production of first product in one batch, then the second product in second batch, then the third product in third batch, and so on. Now, what is the difference in costing between the two is that whenever you are doing costing where you have only one product, your costing is much easy because the process of costing, which requires accumulation, calculation, charging, everything, is simple because there is only one product. But the moment you have more than one products, which will happen in case of batch or where you receive different orders, so you have to do costing for each order, that will become job. In that particular case, this process of identifying cost, calculating cost, and preparing cost sheet will become slightly difficult, slightly tedious, because now there are multiple products, multiple jobs. So you will have to identify, you will have to allocate cost to each job, cost to each batch separately, which will require some efforts and which will require a lot of calculation. So that is what is the basic difference. So here we are talking about these different types of industries. So as I started, so basically you have to identify the nature of business first, nature of industry first, so that you can select the right approach, the right format. Fortunately for job, for batch, and for unit costing, the format is same what you have studied in the cost sheet chapter. Now, in case of unit cost, what will happen since you are manufacturing only one type of product, you will prepare one single cost sheet showing all costs, right? From starting direct material, direct labor, prime cost, then factory overheads, then factory cost, then administration overheads, then cost of production, and so on. And you'll reach the total cost. And once you divide it by the units produced, you will get your per unit cost, which is one of our purposes. Correct? So see, they have given some examples like paper industry, cement industry. Within steel, you may have different types of steel bars and rods. But if there is only one type of steel product that you are manufacturing, then it will come here. Otherwise, steel will also go to batch costing, then mining, then wineries, breweries, etc. So these type of industries produce the same product and therefore have the similar cost, and you prepare only single cost sheet. Now, when you have to prepare a single cost sheet, there are two processes of collecting the cost, identifying the cost, doing calculation easier. Why? Because you'll have a single cost sheet to which all the cost has to be charged. However, when you are charging these costs, now see broadly, you have to charge material, you have to charge labor, you have to charge overheads. Try to recall the chapters when we studied. So for material, how do you charge material cost? You have to identify the quantity of material which is consumed for that job, for that batch, or here for that unit. How do you identify this quantity of material? So simply, how will you charge the cost? Quantity of material which is consumed for that particular job, batch, or product multiplied by the material charging price. Now, how do you identify this material? This material is identified using a document called as MRN. Now, what is this document? Let me explain. Now, in your material procedure, now see here, cost sheet format we are not going to study because it is what you have already studied. Our understanding in this chapter is more about how to identify. So for the direct material or the raw material consumed, as we studied in the material chapter also, you have to identify two things: the quantity of material consumed and the charging price. Charging price we studied, it is total material cost upon the material normal units. That is how you find out charging price. That is by our mother formula, which we studied in material also, labor also, overheads also, and that you study in all subjects, all chapters of costing, like process costing, or even in the chapter when you do your service sector costing, everywhere the mother formula remains same. Now what we are going to study and understand is how to identify how much quantity of material is used for that particular job, batch, or that particular unit. Now, this will be very tricky or will be very complicated when you have multiple products, sorry, multiple material items. For that, we have a material procedure. Now, what is this procedure? So when the material is received, firstly, you have a separate material account called as the source ledger, which if you remember, we studied in material chapter, where you have the receipt column, issue column, and the balance column. And in each, we have quantity, price, value, quantity, price, value, quantity, price, value. Correct? Which you call as FIFO, LIFO sums. Now, whenever now you prepare this stores ledger for each material separately. So let us say whenever the material X is received, it will be entered in this receipt column. And the document which is used for identifying the receipts is GRN, that is Goods Receipt Note. Similarly, when this material X will be consumed for different jobs, it has to physically go out of your stores to the production department. For this, the document which is used for issuing the material is called as MRN. So MRN is the material requisition note, requisition derived from the word request. So it is the request made by the respective production department to the stores department. Ki boss, today I am doing production of this particular job. So send me this much quantity of material. Now in this MRN note, the production person will say that, okay, I am manufacturing job 101. And for this, the material which I require is material X, Y, E, which he wants the stores to issue to the production person so that he can use this material in today's production. So using this MRN, he will ask for material to the stores department. Now this same MRN will help us identify our quantity which is consumed for that particular job or batch or unit. Because in this, the quantity which the stores person has sent of each material to the production wala for that particular job or batch has been written. So how will you identify the material consumed? So it is using the MRN statements, correct? Similarly, for labor, again try to recall, how do you charge direct labor? You charge direct labor by these hours booked multiplied by the labor charging rate. Again, charging rate is calculated by the mother formula. Numerator total labor cost divided by denominator normal labor hours. Now main question is, how do you find out this hours booked? For this, again recall the labor chapter where we studied labor procedures. In that we had time keeping and we had time booking. And in time booking, we studied there are job cards, there are employee cards, and in these cards, you write how much time that particular employee has worked on a particular job or a particular batch or a particular product. So using the details recorded in these cards, you are able to find out how much hours the employee spends on a particular job or batch. So this helps you in identifying the hours which are to be charged to that particular job, batch, or product. Perfect. Correct. So using these cards, the job card, the employee card, then you can prepare different cards for identifying idle time and all. You are able to identify how much time of labor has to be charged. And then finally comes overheads. Again, for which, if you remember in the overheads chapter, we did primary distribution, secondary distribution, all that was done to find out the overhead charging rate. And then we select the basis, and depending upon the basis we charge the overheads. So basis may be machine hours, so we will record the machine hours using the same job card or the employee card which we use for labor. If you require labor hours, that is already recorded for the purpose of labor. So this is how you identify these costs and you charge. Now, what is important in this chapter is the theory part. What is the theory part? What will be the treatment if some of your work is spoiled or it is found to be defective? Now remember students, the treatment is dependent on this. So what we are studying here, a theoretical concept, that is treatment. Now, treatment of loss. Why? Because if it is spoiled, it is defective, it is a loss. Understand students, any type of loss, whether it is by way of spoilage or defective, is of two types. It can be a normal loss or it can be an abnormal loss. Now the treatment is, if it is abnormal loss, it is charged to costing P&L account. And if it is normal loss, then you have to check whether it is of direct or it is of indirect. If it is of direct, it is charged to product. If it is of indirect, it is charged to overheads. Now the most important part, this is the general rule. However, when we go to the details of each type of loss, like here, first is we're talking about spoilage and defectives. Now, if this spoilage or defective is such that it can be rectified, then the question will come, where will the rectification cost go? The answer is simple. If it is due to normal reasons, the rectification cost will be charged to the product. Correct? So whatever cost you have incurred for rectifying the defectives, that will be charged to your product. But if it is because of abnormal reasons, the same thing will be charged to cost P&L. So see, this answer will remain same. If it is normal and if it is of direct, charge to product. If it is of indirect, charge to overheads. If it is abnormal, charge to cost P&L. Fine. Now see, you'll find the cost sheet very much same like what you studied in cost sheet chapter. That is why I said here, explaining you cost sheet is not the purpose, because this you have studied in the cost sheet chapter. So the cost sheet that you studied over there is nothing but either a job or a batch or a single or output cost sheet, right? So instead of that, we'll go to the other aspects that are important in this topic. Now, when we come to batch costing, what is batch costing? When you have multiple products, like take example of any wafers. We regularly consume wafer, though we should not. This is my personal belief that you should not eat any FMCG products, for the simple reason that majority of the FMCG products use preservatives, use different chemicals, which in long run are not good for your health and they damage your different organs. Okay. Now, whatever products you should not consume, but you are consuming, you are buying. If you see on all these FMCG products, you have the batch code written. What is this batch and why this batch is required? For this, understand a simple point. The simple point is these products are multiple. So if you see wafers, it is plain salted, then it will have some strong mirchi flavor. Then nowadays you have so many flavors, pani puri flavor, pav bhaji flavor, so many things. So there is variation in your products, and then each product variation is manufactured separately. So today you are manufacturing plain salted, then you are manufacturing the other one, then you are manufacturing the third one, and so on. So how do these companies manufacture? They manufacture in a batch. Batch means they will decide that today I'll manufacture 10,000 packets of plain salted. Tomorrow I'll manufacture 5,000 packets of, let us say, strong chili flavor, and so on. So they manufacture this in lots, in a batch. Now, when they are manufacturing it in a batch, we need to do costing for each batch. Now, this is done by preparing cost sheet for each batch separately and then running the same process, that is identifying the material quantity consumed for each batch, the labor hours required for each batch, so that you can charge the respective cost to each batch separately and get the cost of each batch. Now, in batch costing, the new thing that you study is EBQ, that is economic batch quantity. Now, this EBQ is very similar to EOQ. So it is similar. The difference is EOQ was for material purchase to decide how much quantity to be purchased each time. EBQ is for deciding finished goods production. What it decides, how much quantity to be produced in each batch. So you manufacture these products in batches, as I just explained. Now today, how much quantity of plain salted you should manufacture in today's batch? That is EBQ. Now, EBQ formula is similar to EOQ. So 2 into AR into S upon C. Now, what are these? What is AR? AR is the annual requirement of finished goods. So annually, how many units of finished goods you require? Like in case of EOQ, it was how much material you need to purchase annually. Here, how much quantity of finished goods you need to manufacture annually. That is AR. So that is the difference. What is S? If you remember, in case of EO, it was O. That was cost per order. So every time you go and place an order, you incur some cost. Similarly, here, S stands for setup cost. What is this cost? Cost incurred every time you set up your machines for a particular production. Now, today you set up your machine to manufacture plain salted. Tomorrow, when you want to manufacture chili, or day after tomorrow, you want to manufacture cheese flavor, every time you have to do some setting changes in your machine so that the machine will manufacture that particular type of product. Now, this setup requires some cost, and this will be incurred every time you set up your machine. Now, once you have set up the machine, whether you manufacture 10,000, 50,000, 1 lakh will make no difference. The setup cost remains same. So this cost is incurred per batch. So setup cost is your cost incurred per batch. Like how O was incurred per order, here it is incurred per batch. And then C stands for same thing. Carrying cost per unit per annum. So C is same. So the difference between EBQ and EOQ is EOQ was a concept required for deciding how much quantity of raw material you will place order and purchase every time. So annually you may require 1 lakh, but every time how much you will go and buy, whether 5,000 or 10,000, that is EOQ. Similarly, annually you may require 5 lakh pieces of your plain salted, example. But how to manufacture this 5 lakhs? Every batch, that is every time you manufacture this, how much quantity you will manufacture in that batch is to be decided. That quantity is EBQ, correct? So this formula gives you the EBQ, that is the quantity to be manufactured in each batch. And again, this gives you the quantity that will be the most optimum quantity. Now, first, again, they have shown the cost sheet. See, again, the cost sheet format is same. There is no variation because cost sheet format remains same for job, batch, etc. The only difference is in case of job costing, you do costing job wise. In case of batch costing, you do costing batch wise. Now, here comes the EBQ concept. If you remember, we had a similar graph when we were studying EOQ because the concept, the logic of EOQ, EBQ is same. So EBQ is the economic batch quantity. That is the size of the batch where the total of setting up cost and the carrying cost are equal and hence they are minimum, right? See the formula 2DS upon C. So D, where I'm using AR, they have said D, that is annual demand for the product because here it is quantity of your final product. S is the cost of setup per batch and C is carrying cost per unit per annum of the final product. Perfect, bit. Yes, Minu, you are right. Yes, Minu, you're right. Perfect. So see, same like EOQ for EBQ also, then you can find out the total cost, setup cost plus carrying cost, the total cost, and you will find that out of all these, the minimum occurs at the EBQ level. So what you find from the formula, the same thing you will get by this trial and error method. So this is what we have studied in EOQ. EBQ is copy paste concept of EOQ. Correct? And then you have this another theory point, which is the difference between job and batch costing. So what is the difference? It is a method of costing used for non-standardized products, that is customized products, where every time you receive a different design and as per the design, as per the specification you manufacture. Whereas batch costing is where you are manufacturing the same type of product again and again. So you have your product range decided, plain salted, chili, cheese flavor, some pav bhaji flavor, and every time you repeat the production of these different products in a particular batch. Here, the costing has to be done for each job order because you have to quote the price and charge the price for each order separately. Here, the cost is aggregated for that batch, and then you divide the total cost of the batch by the number of units produced in that batch to get quantity or cost per unit of that product. Jobs are different from each other and independent because every time you get a design, it will be different from the previous one. So you manufacture as per the design specifications given to you by your customers, who may be generally the large manufacturing companies, and you are the small and medium level manufacturing companies. So these small scale and medium scale companies are mainly engaged in jobbing. We call them as the jobbing units or the job units, and the large scale who are manufacturing the main products, like somebody is manufacturing cars. So Mahindra and Mahindra manufacture cars. For that car, they require thousands of products, right? From the seat cover, the mat, then the interior, different items. All these things, they get it manufactured from different other industries by giving them the design, the specification. And these jobbing industries every time will work as per your design, as per your specification. Correct? I hope this is clear to everyone, right? So these are the different aspects of this particular chapter, students. I hope you have understood the entire concept of job costing, batch costing. So if there are any questions, queries, doubts, let me take up your queries and doubts. Anybody wants to ask anything relating to the job, batch, or any of this concepts, please let me know. Yes, students, I hope everything is clear from the first part that we did. That was cost accounting chapter. We studied the integrated method, which was very easy. And we also studied a very interesting part, which was cost accounting. And then we went on to study a very simple chapter, which practically I've already solved. Today, we did that theoretically, that is relating to the cost sheet. Medha Beda, what have you not understood? Please tell me, I'll explain again. Yes, Medha Beda, please tell me what you have not understood. Okay, so see the difference, Beda. Job is what? You are an industry. You are working for Mahindra and Mahindra. You are working for Tata Motors. You are working for Bajaj. So all these companies, which are large scale companies, they are manufacturing their final product for which they require different spare parts, small parts. They give you the design and you manufacture that part as per their design, as per their specification. This is what you are said to be doing in job industry. You are called as the jobbing industry. Correct? See, basically, Vedant Beda, you will have very simple questions like C. Either you'll have the MCQ type of questions where they will try to understand the difference between all the methods of costing and the difference between job and batch costing. Or you may have straightforward theory questions. The most favorite one is this last one that we discussed, difference between job and batch costing. Correct? Or they may ask you the theory questions relating to EBQ, that is the formula. And the practical part of this is the cost sheet, which you have already done, or the practical part of this is the EBQ level calculation, which we studied similar to EOQ. Correct, Beta Vedant? Yes, Kuldeep. So it is very important that in your exams, you write the steps properly because the steps are what carries marks. So Kuldeep, you're right. You need to write in proper steps. So that is what you will get to see even in our modules. So you should follow the same approach for what is given there. Geeta Beda, if I'm not wrong, I've already uploaded for employee and overheads. If not, I'll upload it today. For materials, I do not have a pre-solved answers. I had mentioned this during the materials chapter. If anybody of you can solve and give it to me, I'll check and I'll confirm, and that itself I will upload. But for labor overheads, I did it in the previous batches the students had shared. So I have that, and if I'm not wrong, I had uploaded. Still, I'll check. If not uploaded, I'll re-upload. Fine. Perfect. Then, students, let us meet again for the other topic. Hey, Kuldeep, you can use abbreviations, but how? First, like if you remember how I saw it in the previous class, I first wrote the whole name of the account and in bracket, I've used the short form. That you can do. And once you have done that, you will then use the short forms while passing the entries. So you need not waste time always writing the full forms, but somewhere you should have given that this means this short form. Once you've done that, you can do that every time. Correct? Yes, yes. Yes, Meda. Super. So that's it, students. Thank you. Thank you very much. Yes, meeting you all again. Looking forward to meet you all soon. Shamli, definitely. We are meeting. So thank you. Thank you very much, everyone. Thank you, Minu. Yes, thank you, Beda Medha. Bye-bye. Take care. And please, please practice. As I had mentioned in the previous class also, that we have many students who are scoring beautifully, and now we have results of past multiple batches that we have been conducting, and every batch we have rank holders also, and in the previous immediate last result we have one more rank holder. So students, that all is because of the practice and dedication of students and the sincere disciplined approach. So please you all also follow that, so that we see you all also coming in flying colors and getting through this very important course of your career. And completing this course is dream of many, and I wish that everybody's dream come true. So please be regular, please be sincere, and take extra efforts by solving past exam questions which are hosted in the form of MTPs, RTPs. We are hosting so many materials on our portal, BOS portal. So please refer to them. And we faculties all are always available to guide you, help you in solving your doubts. So please do that. But everything is on our BOS portal, Kuldeep. So once you go to BOS portal, you will find in different sections, different things uploaded. Fine. So best wishes to everyone, and let us catch up again. Thank you. Thank you very much. Done, Manish. Thank you. Thank you very much. Good day.